Hello friends, and welcome to the stock market update. Apologies a couple of days late. I'm speaking on Monday the 25th. I should have recorded this on the preceding Friday. Nevertheless, invaluable it is. These are the price earnings ratios. Again, you can see everything that is expensive except energy and banks. In other words, it is the share price that you're paying for every dollar of profits. The more you're paying for the shares for every dollar of profit, the more expensive something is, obviously. And Amazon is $102 you're paying for every dollar of profits. That doesn't necessarily mean that the price can't keep going up, because it's partly dependent on what future profits are expected to be. Now remember, as I'm about to go through all the bellwether stocks, the S&P and everything else, we don't just look at the charts, we also look at the fundamentals, and this is a snapshot of the 10,000 stocks we look through and all the metrics we look across. Valuation, such as price earnings ratios, price earnings growth, revenue growth in terms of growth, dividend yields, earnings growth, cash return on capital invested, which is croaky. So we're going to look at all of these when I give you the stocks that I like. Momentum, because we know that is correlated to future price movements. Sortino, which is a measure of the average returns versus the risk of missing it to the downside. Alpha, the ability of a stock to outperform the index, because if it can't outperform the index, then just do an index tracker, obviously. And volatility, etc., and all of these other factors which we know are linked to future price performance, but none of them is exclusively a predictor of future price movements. They all have something to do with making the prices move. Some things are more important than others, like valuation is more important than growth, for instance, most of the time. So how has performance gone? Well, it's been an ugly week, and you're about to see why it's been an ugly week, with the exception of United Health, across the markets in just a second. These are price earnings growth ratios, and you can see there anything above 1 will be a red, or it'll be off green. So there's very few which are relatively undervalued. You want it to be under 1 to suggest that the share price is cheap compared to the rate at which profits are growing. And again, banks a little bit on the cheap side, some of the energy companies, but there isn't much by way of value, which is fine because it's growth that the market's looking at. Now we really have got whacked. Because we maxed out at 44% growth on the NASDAQ so far this year. Now we're only at 34%. The S&P had hit about 18, 19% year to date. Now it's only at 12%. As well. So what's going on? Should we worry? Is it a buy the dip, or is it get the hell out scenario? So this is where we are. Now we have most definitely broken below, as I worried we might, below the support line, which was this line upward trend here. We've broken below that. We've decisively broken below it. So we've now got a new downward trend. All right, that's the new downward trend. And until we get a price move above there, we can't be assured that the downward trend has ended. We are now officially in a downward trend. All right. These suggest that there is some pressure on the downside. These stochastics on the weekly and monthly are more sensitive to price moves, but they're less important as to how the future might pan out. Now, we don't use this the way the textbooks do. We do not use this the way the textbooks do, before people start criticizing. MACD, which is a measure of momentum, is more important but tends to be a bit slower. And again, I don't use it the way the textbooks do. This solid blue line is the weekly, and that certainly suggests it's going to be falling. Okay, and you've seen it do that below. And it's more serious when it's below its yellow moving average. Okay, it's more serious around here. However, it all depends on what the MACD is doing. If the MACD is edging lower, then you can expect prices definitely to keep dropping. If it is flat, then hopefully you might have only small falls which then recover like this. Okay, so which scenario are we in? Now, at the moment, doesn't mean we're definitely in that scenario. It looks more like, because the dotted line, the monthly MACD is sideways, that any falls shouldn't be long-lived. However, don't forget September is rubbish, but October is a lot better. And I wouldn't be surprised if we see falls until the end of September and then we get a bit of a bounce back in October. That's the more likely scenario. However, that is not to say that we might not go all the way down here. We could. So what do I think is the most likely thing? I think we'll get more falls to the end of September before we start going towards this downward trend, which will be slightly upward move. All right, so if you're risk averse, and you might look to start selling. If you're risk neutral, you might say, well, if it drops, if my stocks drop 10%, I'll sell 10% and so on. And if you're risk loving or just a bit more formulaic, and I'll show you my formulas in a second, then you might say, well, I'll just stay in and hold for now. Okay, so that's where we stand with that. And I said with the FTSE, now it looks like it's bottoming out. I still remain not too optimistic on it because the MACD is below its moving average, which is that dotted line, which is still negative and bearish for me. Apple, these are the bellwethers. What are the bellwethers telling us? Because they might give us a signal what's going to happen. Seems to be a bit of a support there. This is now moving downwards. Now, the danger comes if it drops below its own signal line, as it did there, then I'd start worrying. But if it just kisses it and then goes back upwards, then you're probably going to get something like this, which is, well, moves upwards again, okay? I'll make myself smaller. Right, so at the moment it looks like it's going to be more like this scenario rather than this scenario, right? So it looks like it'll be bouncing upwards rather than continuing significantly lower. That's what I'm thinking, right? But let's see what happens let's see what happens on Wednesday when I do the next update, because we'll get more data then. The analysts certainly think there's upside to it. By the way, that's your analyst there. JP Morgan just said on the 21st of September, buy. Barclays said it on the 19th of September. Credit Suisse said it on the 15th. Bank of America said it on the 13th. They're all saying, sorry, Bank of America said hold. Oh, Barclays said hold. Apologies. These two said hold. Okay. So what about Alphabet? Well, they had that big drop. They've had it before, and just after that big drop, they get this big rise. So what does this look like? Well, it's overbought. That should move lower, so that's downward pressure. This is sideways. That hasn't fallen sharply. Looks like we will get downward pressure looking at everything else, and September being an ugly month. But it doesn't, it's too early to say if it's going to be one of these, where, as you can see, if you then look upwards, it just collapses, doesn't it? Okay, so it's too early to say if we are about to have a bear market, and I wouldn't be able to call it yet, would I? In Alphabet, would I? I wouldn't be able to say, yeah, it's all going to sell out. But if you're very risk averse, you probably would take some profits. Now, Microsoft, again, got a bit of a base there. What does it mean? Well, this is sideways, and this will indeed go lower. So whenever we had that before, well, we've had something like it over here, where this was sideways, and this was falling. And what had happened when that had happened? Well, you had this. So we've got to be careful. We could well indeed get a fall, a steep, and it happened at the same price point, by the way, which takes us all the way down here to 208. So don't get greedy. Don't think, oh no, these things only go up and up and up. Microsoft could go there. Do I think that's likely? Well, I hope not. I don't think so. But it happened on January the 1st, 2022, and I remember because 2022 was a stinker of a year, and in the end we had to say by the end of January, I think early February, we're telling everybody, right, get the hell out. So that's why we do these twice weekly broadcasts, because if it becomes like this, we'll look at it for you, and you'll watch us on Wednesdays and Fridays, and you'll say, shit, Alpesh said get the hell out, now it's time to get out. Is it too early to call it? I think it's a bit too early, but if you're risk averse, you might just say, I am getting out of here, compadre. If you're a bit more risk neutral, you might say if it drops 10%, I'll get out 10, 20, 30%. If it drops 30%, I'll get out all of it, and so on. You'll do it accordingly, okay? So the analysts think that. By the way, all these analysts, all the HSBC just turned to hold, which is less than a buy, okay? Amazon, look at that massive drop that we've had there, overbought, and that now is looking like it's going to drag it lower. This is still above its yellow signal line. It's moving average, it's going sideways, and therefore it is more like, I guess, this kind of scenario. And whilst this is falling, the weekly is falling and the monthly is sideways, you will probably get sideways moves in the prices. So you should only expect this to keep doing, you know, sort of that pattern, and we'll keep a weekly update on this and let you know when it's going to start doing that. Well, it'll have to break through that for us to be sure anyway, break through its most recent high. So for the moment, expect Amazon to go sideways. You know, you've been spoilt. You've been spoilt rotten by the gains you've had since January of this year when we said buy it, and now it's going to go sideways a bit. So now you know, okay, even though all these banks say buy, and even though October and November tend to be really good months for Amazon. And the analysts, if they're all right, then on average, they're predicting 30% to the upside. Now, Disney stinks still, doesn't it? Look at that. Disney the stinker. So where we are with Disney. And just keep an eye on it. It's a good education that not everything goes up. And that's why I want you to look at it. In September and October, I expect it to be bad. So I expect it to continue down here and probably, possibly, likely go below that. All right. So I certainly won't buy it now. I certainly won't buy it now, even though you might say, well, actually, Alpesh, last time it touched that, bloody hell, it doubled my money. Yeah, but that's too early to buy. So this is an education in risk management. You know, if you're really risk loving, go to Vegas or buy Disney now. Up to you, Vegas or Disney now. Right. NVIDIA is here. It's got a double top formation, which people will tell you suggests it's going to drop by equidistant from the neck to the top to the downside. And that suggests you're going to fall. That's overbought. So if you're risk averse, you'd sell all of it, or say if it drops 10%, I'll sell some, and so on. And I better make a note to do and look at the same. Just have a look at it and say, well, I need to sell some. Whoops, there we go. NVIDIA, if it dropped, well, I need to get my team to keep a very close eye on it. Because we've had some big profits since then. So if it drops 10, 20%, we might sell 20% of it. But the market thinks it's got a lot more to go, and it has. That's why we might not sell all of it. On Tesla, so we are with that. It's also getting hit, obviously, by everybody else, and it's time for it to go sideways a bit or fall a little bit and then go sideways. And September and October are notoriously bad months for it in any event. Now, Guggenheim have said sell. Goldman's and UBS are only saying hold. So you can imagine if you're risk averse, you might say, I'll sell half of it, and so on and so forth. Okay. Meta, look, it's had this massive run up. Don't get greedy. Now it can't keep going up like that, right? And the weekly is certainly saying it's going to fall. And the last time it did that was like this. And if it drags this monthly lower, which it sort of did here, then you're really looking at the last fandango and a fall. So risk averse, you might sell all of it. Risk neutral, you might say, well, I'll wait to see if it drops 10%. I'll sell 10% if it does, or 20% or 30%, depending on your risk appetite. Okay, that's your Meta for you. ServiceNow, which I like, but look very similar to the others, I'm afraid. And whilst I continue to like it, I'd be waiting on this one because unless it falls, I'm going to wait. And yes, it's going to have a few days where it's going to hit me. It's going to hurt. That's a double top. It's going to fall probably by that same amount to the downside, which means it's probably going to go below 500 from 550. So what does that mean? 10% drop? Wow, that could hurt. Okay, it's not 25% drop from the peak. 17.5% to the upside is what the market say. Cisco, massive hit. This is profit taking. This is not suddenly that these companies are rubbish. And this is also educational for you, because what it shows you is all the companies are moving in a highly correlated manner, except Disney. And the reason for that is not because they've got individual news all at the same time. It's just there's a bit of profit taking now. There's a market looking for an excuse to get out. September, sideways, so a bit more like ServiceNow. If you're risk averse, do what I said before. Have a look at these, have a look at that. We're not trading our investments in any event, so you might patiently wait, because longer term, we know there's more upside. Have a look at the campaign for $1 million. Those are my great investments program. You will get on the private Telegram channel a full, more detailed version with a lot more stocks of this presentation. So make sure you look at the private Telegram channel for those on my great investments program. Everyone else, have a look at the campaign for $1 million. And I will see you on my LinkedIn or my YouTube. Have a look at alpeshpatel.com/links to find all of those. Thank you.